So how did the pre-IPO market start? What's the history behind it? Well, we kind of got to go back a few decades first. The early 90s, you've got a lot of really exciting technology companies going public. And as we all know, we've heard of the dot-com crash. That hits really hard. Post late 90s, it became more expensive and more prohibitive to go public as a company. There's something called Sarbanes-Oxley, and it required much more scrutinized diligence for accounting for your company to go public. So all of a sudden, to be a publicly traded company was going to cost you millions of dollars. An unintended consequence of that, starting in kind of the mid to late 2000s, was that companies decided to stay private longer, right? Oh, well, if it's going to cost us a lot to be a public company, maybe we'll just stay private a little bit longer. That's easier. Piece two is we had the Great Recession. That was 2008, 2009. So starting in 2009, 2010, much lower interest rates, AKA it was a lot cheaper to fund tech companies. So tech companies were raising a lot of capital while they were private from private equity firms, venture capital firms, etc. If you kind of think about it, if you left money in your bank account in 2010, you were going to get a couple percent interest rate or almost zero. So if you think about that for institutional investors, they had to go seek higher returns. And private companies is one of the places they went. And so this confluence of events combined with one last piece, which is something called the Jobs Act, which was an initiative to incentivize more investors to come into the private market and to fund tech companies and startups. Those three things come together and you kind of have this perfect storm of secondary markets getting really big. And that kind of created the secondary markets in the way it is now. So companies like EquityZen got started in 2013. There's a number of other platforms as well around this time, realizing that there was a much needed solution for the illiquidity problem of large private tech companies. So historically, probably the first big name that started actively trading on the pre-IPO market is Facebook. So Facebook ended up going public in 2012, and leading up to 2012, there were a lot of trades that happened in Facebook on the private markets. That kind of set off a trend of other companies realizing that there was a chance for liquidity for their employees, for investors to get in. So that quickly followed, maybe Twitter was probably the next big one. You had a bit of Alibaba. You fast forward and companies are getting bigger and bigger and bigger. You've got Uber, you've got Lyft, you've got Coinbase. And so this trend really, really got turbocharged. In 2013, there were probably like 40 or 50 unicorns, right? Which is a company worth $1 billion or more in the private markets. Fast forward to 2020 and 2021, and that number was over 1,000, right? So this is a very, very rapid ascension of value that's being captured in the private markets that secondary platforms are helping to unlock for buyers and for sellers.